This week in the parish of bourses and market structure, as DC regulators talk kumbaya, BQ is cancelled, while LSE and ASX pioneer FaaS, there's an SEC dream probe, and ESMA makes a power grab. My name is Patrick L. Young. Welcome to the Bourse Business Weekly Digest. It's the Exchange Invest Weekly Podcast, episode 316. Good day, ladies and gentlemen. This is a very brief reduction of highlights amongst the key headlines from the week in market structure. All the analysis of the many events and happenings from the past 7 days can be found in Exchange Invest's daily subscriber newsletter, the unique guide to the bourse business sent daily to your inbox. More details at exchangeinvest.com. Over in BitCarnage, lo, it came to pass that the Winklevi have apparently pushed out Brian Contends as the new crypto chairman of the CFTC for the sin, it seems, of not being crypto enough. It's a kind of DeFi et tu Brute, I suppose. If you enjoyed this excerpt, you may be interested to know you can read BitCarnage every day in Exchange Invest. Alternatively, if you want to follow BitCarnage, the daily update on happenings in the world of crypto and digital assets, you can find BitCarnage as a standalone on Substack. In the world of exchanges, the CFTC and SEC had a round table, and all we seem to have gotten is lousy crypto talk amongst the kumbaya. The big fat epicenter of the bell curve was outshone by a tail barely larger than Nvidia's market cap and outshone by the chipmaker and Microsoft. Anyway, Unity at least brought denial of any merger, which is a relief all round. At the bourse end, failure as a service is now a thing in our parish. In many ways, one might say ASX got there first, and we have now perfected the fine art of appearing blithely corporate while eschewing any blame for management on actually delivering a market. The London Stock Exchange is now in the same zone with their CEO. Remind me, what lucky bag did somebody find this woman in? Rarely has any exchange been blessed with such consistent ineptitude. In response to Euronext trolls, the answer was not given by the dismal dame, it was spoken by the fewer than 70% of shareholders voting in favour of remuneration packages for the LSE management team. Well, they are a team. They're united to pay themselves more regardless of their incapacity to deliver markets people want. Full marks to Euronext that they can rattle the LSE, but again, as Mexico sails past LSE and IPO volume, it is clear that the UK has marked intention to win the reverse Melee prize by beating the rest of Europe's growth incoherent nations to become the next Argentina, Peronist style. That LSE is trolled by Euronext is one sign of failure. That the one-time European leader is rising to the Parisian bait shows how far the exchange's management ability has plummeted. Meanwhile, a potentially seismic move from ESMA. They're looking to take oversight on crypto and stock exchanges. In essence, the EU is looking to cut all the national market regulators out of regulating their own markets. That's a potential disaster area, as the next step is presumably enforced mergers between exchanges, which will only further deteriorate the EU's crumbling capital markets. There's a lot to unpack here, as it might have the odd advantage in some places, but overall it's hard to trust ESMA when their EU EC paymasters are eager to cut and shut all EU markets into, at best, a lumpen duopoly. LSEG, meanwhile, have agreed a long-term extension of their Paternoster Square office. The world's 23rd largest IPO venue, LSEG, staying in Paternoster Square, raises the question of what might remain by the end of this long-term tenure. Perhaps just a jaunty, dangling letter G above the portico. Either way, ICE now have a ringside seat from their European headquarters next door in Paternoster Square to watch the ongoing decline and fall of the LSE empire after a Gibbon-like fashion. Down under, it's nothing more than a minor start, but at last, ASX has a challenge for listings. SIBO have been licensed as a listings venue, reducing the ASX market monopoly in one element. Thanks for listening to Exchange Invest Weekly. We welcome your feedback. You can contact me directly, patrick@derivativesvision.com, with any comments. Meanwhile, if you enjoyed this show, we would welcome you giving us a thumbs up. Or, if you have time, a positive review will always be welcome, wherever you find this podcast. In new markets, the Texas Stock Exchange has won SEC approval. Y'all Street has a licensed business whose addressable business proposition isn't what it was when the paper went in just a few months ago. That's not an SEC issue. Rather, the US regulator has, it seems, worked speedily and efficiently to deliver the license. The trouble with TXSE is they are now licensed bereft of a viable business model and we're still a seeming excess of the startup hubris which has damned so many other new exchanges. I find it frustrating, beyond frustrating indeed, that so many new bourses end up resembling a very public male midlife crisis. Will TXSE be the next one? Too early to tell, but the omens are not portentous. In deals, a couple of great deals amidst a busy week for deals in the parish. All the deals were in Exchange Invest Daily, the newsletter no person can afford to be without in capital markets and market structure. For the sake of this podcast, let's look at some edited highlights. Euronext deal on. Stefan Bujna has taken advantage of the relative lack of initiative from Greek exchange CEO Yanis Kantopoulos, a classic investment banker in situ appointed just to do a deal to sell, as opposed to develop the business. Hellenic exchanges, the offer is now open and it is a lovely asset to add to the Euronext empire. Another Bujna success. Meanwhile, across the Atlantic, ICE, the NYSE parent, are going to invest up to $2 billion in the prediction market Polymarket. Data, ladies and gentlemen. ICE gets to distribute it to institutions, and it's finally where I thought we could pioneer prediction markets 3 decades ago. More's the pity I was way ahead of the curve, not the only time, but interesting to see how this data packet is going to feasibly power all manner of institutional thinking in the future across all asset classes. Meanwhile, this week we've been taking an opportunity in Exchange Invest to look at the Young's Pyramid and a quarterly update. Fascinating events happening in Tiers 1, Tiers 2 and indeed Tiers 3 all over the place. M&A, all sorts of interesting political manoeuvres and more. For all those details, you can catch the information at exchangeinvest.com. Sign up now for a free 1-week trial and indeed join us at the exchange of information. If you fancy some financial insights with moving pictures, check out our live stream, Tuesdays 5 o'clock London time, midday New York time. It's the IPO video live show. Catch the back episodes on LinkedIn and YouTube via IPO-VID. Now online is this week's episode, Quantum Finance, with Hayden van der Post, looking towards an incredible new and interesting possibility for the entire world of finance. While coming on IPO-VID 188 next week is going to be Paul Podolsky discussing the uncomfortable truth about money. This week's book of the week is The Essential Guide to College Financial Planning, How to Pay for College Without Going Broke. John Ensley reveals the new secrets to beating astronomical college costs. Don't forget, our book of the week comes out in Exchange Invest Weekend, which is a free macro read. You can sign up for that as well at exchangeinvest.com, and as I say, it's completely free of charge. In regulation, all of that kumbaya between the SEC and the CFTC, a new era of collaboration between the two agencies being trumpeted by Chairman Paul Atkins and indeed Acting Chairman Caroline Pham. Good grief, sharing the love in a GOP administration with such a fusion, it feels like this CFTC-SEC were hosting a Woodstock reunion. Trouble is, the focus needs to be on legacy markets and not merely indulging the CryptoKitties' short tail. In career paths, well, it's related to the CFTC, of course. White House has pulled Brian Quintence's nomination to lead the CFTC, and ultimately the Winklevi, as I mentioned earlier, have won in what could yet prove a remarkable frontline spat between the uber doctrinaire and the overzealous. The notion the A16 staffer Quintence was insufficiently devoted to the crypto world angle has always struck me as ludicrous. Now who comes next? Recent backchat suggests La Femme truly is serious about joining the private sector again. Thus the unhappy nomination of crypto loyalist Brian Quintence as CFTC chairman dies because he isn't crypto loyal enough. This Soviet-style spat of distributed doctrinal perfection could yet go in the history books of market hubris. Does it spell upcoming permanence for La Femme Fatale, or is she truly determined to go back to the private sector? Over at SIBO, interesting upheaval. Catherine Clay is departing as global head of derivatives, and she's going to be replaced by a returning Rob Hocking. Meanwhile, in Big World readers will recall that PLY has been consistent in noting British Prime Minister Keir Starmer would not last a full term in office, despite a stonking majority of MPs elected in a lukewarm mandate on July the 4th, 2024. If anything is noted recently, that looks like the height of optimism he would survive not quite a full term. Knives have already been out as the Labour Party annual conference droned on in Liverpool recently. The perma-disappointing PM Starmer has achieved a new low. Where Liz Truss managed a minus 51% net approval rating, Starmer has plumbed new depth, an all-time PM approval low at minus 66%. And on that mysterious and magnificent note, thank you for listening to this EI Weekly Podcast number 316. Join us daily via exchangeinvest.com, or if you have a new exchange or marketplace you'd like to, get in touch. My name is Patrick L. Young, and I wish you all a great week in life and markets. This show relates to the business of bourses. It is not to be construed as investment advice, nor are we making any investment recommendations. Please consult an investment advisor before you make any investments, and for goodness sake, do your due diligence and do not make investments without complying with the regulations in your home state. Exchange Invest cannot be held responsible for any investment decisions made as a result of our program, which is for entertainment purposes only. The material herein is copyright Patrick L. Young at the date of publication, while our music and sound effects are sourced from copyright-free sources. Thanks for listening to Exchange Invest Weekly, the exchange of information.